Trading Market Technicals morning call video for Thursday, September the 12th. Another update in the markets. Dow up 135, Nasdaq down 4, S&P up 5, Russell really unchanged, down about 39 cents, and Nasdaq really held its own. We had continued selling in Apple. What a great little call that we put out on, I believe it was on Tuesday. We said that Apple actually tends to fall after announcements 0.59%, and boy, it got clobbered yesterday. Nasdaq actually held up very well. Why? Because you have large cap tech, LinkedIn, Baidu, Google, if you will, the big ones of the world. They're holding their own, and they're moving up higher and higher and gradually keeping that index up. Most of the buying of the last 7 days that we've seen has been index related, and I'll show that to you in the chart segment. And before we get into the indicators and the charts, I had a couple of great emails, and they said a couple of day traders, intermediate day traders, said, Mark, market's up, and I'm not really doing anything. Why? Is it maybe I should be looking for something else? And I say no. You stick to the same trading plan that you have been successful with. And the reason why, if you just really dial down to a 5-minute chart, look at what day traders are dealing with right now. It's literally a gap up, sideways consolidation, and then one big pop up. Same thing here, like yesterday morning, we sold off ever so slightly, slow grind, one big candle up, sideways consolidation, and a short covering into the close again. And if you could just look at it, same thing here, gap up, sideways consolidation, one big candle up, sideways consolidation, one big candle up into the close. And that's what we've been having. Now, if you're a position trader or a long-term trader, that you have, a series of long positions, then you're doing quite well the last 7 days. But if you're a day trader, you're looking for volatility, and this is not the volatility that we're looking for. You need movement in the markets. Markets go down 30 points, and markets rally back up 15 points, but go down another 10, and making a series of lower lows or lower highs, or vice versa, making a series of higher highs and higher lows. So that's my answer to you guys. And it's okay. It's normal to have that because of the fact that the markets aren't giving it to you right now. So you need to really just take a step back, look for the great opportunity, and if nothing comes across your path, you just wait for the next opportunity. You're not looking to take these big losses trying to trade when if there's nothing really going on, it makes no sense. And that's what a professional does. It kind of reads where is the opportunity, and if there's not an opportunity like here giving it to you, then it's really take a step back and wait for it to happen, because otherwise it's just a losing proposition. You don't want to be really getting stuck here. Anyway, I hope that helps. Anyway, let's get into some of the indicators. We have the tick chart, end of day tick, and again, we're making lower lows and lower highs. Market's actually made a couple lower lows and lower highs, and now starting to break back up and look to challenge the highs. Again, does this really mean much of anything? No, it's just that the end of the day tick reading is not as strong as we'd like it to see. Take a look at now this is where I like to dial down into some of the other indicators here. Here's the stocks above the 50-day moving average. Now, we broke above here. We have 7 days. It's at 68%. It's mildly getting overboard, but this should be really back at these highs already. If you had a 7-day run straight up, but the indexes are moving. You see, that's the problem. And just selective large cap stocks are moving these ETFs higher. Stocks above the 200-day. Look how it's lagging. This is lagging. This should be way up in here in these areas again. We had the same movement here as we did here, and look what happened. We're making a lower high here. So that's my answer why the markets are moving. The ETFs are moving. If you're not a trader of ETFs, which I am not, only a selective, like if I'm looking to short spiders or short the market or, buy the market or buy a selective ETF, like we talked about the SMH, I wouldn't really, you wouldn't know this by not looking at the stocks above the 200 and the 50-day moving average. So that's really the answer. The ETFs are moving again, and they've been doing this for quite some time, for the last, actually since November lows, actually, that's been going on. Okay, so what do we have? We have the Fed threatening a taper in September, which I think they will, and they're buying $85 billion in bonds. And do they taper maybe down to 65 or 50? I think it's possibly the case, but I think they're going to do whatever it takes to continue to hold this market up. And that's why I say if you think that you want to get short the market up here, while the stocks and the ETFs are making new highs, you're crazy. I'd love to be short, but I'm not going to be short until we have a pure signal to say the market is indeed starting to roll over. Let's get short the market. So I'm not doing that at the moment. Now, one thing is we have extreme complacency in the market again. Markets now have actually broke below this area. So I would really like to see a flush. I would love to see this market rally really hard for another 2 or 3 days into the highs. Maybe take the highs out, take the stops out, and then really clean out the shorts. And then that's when the market's going to sell off. Until then, the market keeps chopping around these ranges, you're not going to get it. So I'd like to see this VIX come way back down below in here again, close outside the Bollinger Band, get back inside, put a buy signal in, and I think you might have a market top. But until then, markets will continue to grind higher. Now, we're down about 2.5 in the minis in the extended hour session. Nothing really to write home about. Very, very quiet. I don't expect much today. I would expect something more like a sideways to maybe lower price movement, but I don't see a catalyst to sell this market. And again, if they shrugged off Syria and now the asset purchase reduction plan for the Fed, I really don't know what's going to sell the market off. And remember, guys, the weekly and monthly charts look fantastic. I've been saying that for months. So you got to really use caution. And I would like to be. What I'm doing is looking for selective stocks that either have relative weakness to the market or relative strength to the market. So if you want to short something and the markets are running up, look for relative weakness. But again, you're still going against the grain, so that short will still be a little bit harder unless obviously you have a big catalyst. Okay, let's take a look at the U.S. dollar. Now, the dollar actually broke down a little bit, broke below the 50-day moving average, the 20-day, and, of course, below the 50 and the 8. So now but dollar still has a lot of support here. So I don't see this being anything but more like a bull flag, or maybe if they do retraces back to the 81 area here. Now, what's really encouraging is the euro. The euro now is filling the gap. Does the euro get back up to 34? This is where I'm looking for to see what happens with the euro dollar and the dollar itself. If the dollar can gain momentum in these areas on down below at the 81-ish area and the euro start to roll over, that's going to be a nice short. But right now, it's not a short. Remember, keep that in mind. We need a trigger, and the trigger is not because price is getting at that area. We need price to start to roll, put in a reversal candle, have the moving averages start to roll back over again, and take out the previous day low for a short setup, and or a buy setup for rather just reverse, because then you can manage your trade properly. All right, so now let's go into the chart segment. And again, really not much of anything here, but here's gold. Now gold obviously is going to have some weakness because of the fact that risk on again. Nobody wants gold. The Syria conflict is now subdued, and if that happens, it's probably going to be weeks to months before any bombs hit Syria. But you can see here, still in the bull flag. I'd like to see another pop, make a lower high off of this high here, and then I wouldn't mind shorting gold again. But I really like it at the 139, 140 area, but I don't think we're going to get there at the moment. Here's USO, as you can see here. Big gap down, put in a doji star. We're still in this gap area of support, which is now, was resistance, now support. As you can see, this is going way back in there. So we're still holding above this upper end here. And like as you can see, oil, is not really going anywhere. But I like to see one flush down. I'd love to buy gold. I'd love to buy oil in this area here. But until then, I'm just gonna stay away from it. Here's the EEM, emerging markets. Now, don't forget when we start to gain a little more momentum and UK gets online and really starts their recovery, you might see weakness in the EEM and emerging markets because obviously they've taken a leadership role here, and then money will flow back out of that and into U.S. and the UK markets. So, something to take a look at. Again, we're in this big area of resistance now, so let's see how this handles itself out in the next couple of days. Might be a short. Okay, here's the S&P. Now we broke back through it, back through the area, and as you can, it's obviously silly. It really is how the markets just go from here all the way up, have 3-day sell-off, 2-day pop, 2-day down, and then a 7-day rally. It's just totally insane. But again, that's what we're dealing with now in this new market with all the algorithms and high frequency trading going on. It's just sometimes it's quite nerve wracking when you say, wow, the markets really, should they be doing that? But again, we're not here to tell what the markets do. We're definitely students of the market, always will be. We just want to learn from it every day and do the best we can to manage our trades to make money. And that's really what comes down to it, guys. All right, so there's the S&P. Really not much to say. I'm looking for some sort of a pullback, at least a pause. And I'm not looking to get aggressive at these levels, guys. I'm really not. I'd like to see this market rally, take out the highs, get the short stopped out, and then start to roll back down again. That's what I'm looking for. And I'll keep my pallets dry and be ready for that. When that does happen, rest assured I will be very, very active in trading. But again, I'm just looking for the selective trades, some good trade ideas maybe for an overnight hold or so. But as you can see here, we did break out of this area where I have my arrows. So now what's the next step? The next step is either going to be to pause in this area, hold this area of 1683, 1680-ish, which I believe that we will, and then probably take a run for the highs. Now, if, as you can see here, we're really quite extended. So the guys, everybody that are holding long positions, this is not the area to be adding to your long position. Not the area at all. Taking a fib number, and as you can see here, we rallied. We actually got down to about a 50% retracement, not quite the 68%. Give it another shot, and if it makes a higher low off of this low, maybe you add a little bit into your long-term positions, but definitely not be looking to add any type of position. Here's the weekly, here's the, daily spiders. Again, spiders a little weaker, but definitely did their job yesterday. Again, on weak volume. I mean, volume isn't so great on the spiders, but again, we're holding that gap. Now we got a gap support area to contend with. If you're looking to roll over, we got to eat through away that area of supply, of support. So this is the area that we're going to be looking for now if the market does indeed start to roll over. And diamonds actually did very, very well. Remember, we're going to have three stocks that are going in to the diamonds and stocks that are coming out. So eventually, next couple of weeks, the Dow is going to actually change trade a little differently here. So just keep that in mind as well. But it's not going to happen for another couple of weeks. Russell, IWM, it made its move, so it just had an inside day from the previous day. But as you can see, quite bullish, not going anywhere. So that's actually a really, really good sign. Transport, same thing, inside day from the previous day, had 3 explosive days out of this pattern. And again, testing the highs. We're literally near the highs here. We're $1.10, $1.12 away from the highs in the transports. And if you see the transports in the Russell and the NASDAQ all taking leadership roles, you cannot be looking to short the market. You can't do it. It's not worth it anymore. You can't do it like you used to back in the day. Oh, I'm going to look to fade it because the market's going to come in. It's not going to come in. At the end of the day, I was watching the S&P. They were trading at new highs at 415. That's absurd. 415 trading at new highs, and when the market reopened at 430, the S&P actually traded even higher. So this is what you're contending with. You can't look to say, "Oh, I'm right." This is not about to be right. It's about making money, guys. And if it's not the right time to be short in the market, shouldn't be short here. Okay, so this is where we are here. Inside day in Goldman. Taking a little breather, but again, very bullish. As long as it holds this inside candle here, Goldman's going to probably look to test the highs here for this year. And here is the XLF. Again, pretty healthy. We're back above the 50, above the 20, and way above the 200. So if the banks are going to take a leadership role along with big cap tech, that's a really good sign that the markets are going to rally. Now, do I think the markets rally between here and the end of December? We'll get that Santa Claus rally? Absolutely not. I think the markets are going to be poised for one big push lower, and then that is where we look to buy and get aggressively long, even intraday. Here's Apple. Apple got destroyed. Now, yesterday I said if it holds here, you could take a good shot to get long. Not even at the opening, it gapped down. So this obviously didn't happen. But now we're at the 50 and 200. Believe it or not, Apple here looks like has a golden cross happening here, crossing 50 above the 200. Now, if Apple continues to sell off, then that 200 is going to roll back over along with the 50, and that's just going to kiss it and then roll down. But if Apple can sustain itself, believe it or not, guys, here is a very big area. Now, here is more interesting, okay? Yesterday's low is a good spot to say, hey, for a shot, okay, and I mean for a shot, we're not gamblers, but for a trade, for a risk-reward trade, very easy to manage. If you want to look to hold, if Apple stabilizes in the morning and look to buy calls or look to buy some stock, you can literally buy Apple knowing that your stop's going to be below yesterday's low, okay? And then, of course, the high you'll have to contend with as you're going. But this is a decent area. Now, Apple comes into some seasonal weakness going into the first, second week of October, as well as technology. So maybe Apple just shops around here for a couple days and then starts to make its move up going into the holiday season. Who knows? We don't know. But I did have a funny feeling that Apple was going to at least sell off one more time. And that's common because Apple, every time it announced a product, it always sell off. And again, I get a few emails, hey, nice call on the Apple. And right now, I think Apple, again, is still a day trading stock. When do you accumulate it? At this point, this is getting interesting now. We want to get through the next 3 to 4 weeks. If Apple can actually consolidate even lower, trade lower down to 450-ish area, I don't think you're going to see 380 anymore. But if you can get into the low fours, then I'd say it's a great shot to start accumulating Apple going into the holiday season. I think Apple's going to have a great holiday season either way. It's great products. But again, as you can see, the wow factor was gone on the announcement, and everybody knew about it. They bought into it, and then they sold the news. So remember, guys, you don't want to be holding into any kind of catalyst. As you can see, you can really get hurt here. Okay, so anyway, that's Apple. I'm looking for where we're going to stabilize, and that's when you want to start looking to build a position. At this time, you're just looking to pick a bottom here. I would not be looking to buy Apple here at the moment. For a day trade, absolutely. Okay, and lastly is the Qs. Okay, guys, have a great day. We'll speak to you tomorrow. Let's see what happens today. I don't see much. I think maybe we get some sideways consolidation to a slightly down day. Maybe today, tomorrow we hold, and then either continue to rally or we look to sell off. But I like to see us, again, just a quick recap, is test the highs, take out the shorts, and then start to roll over again. That would be my best bet. And then look to start fading the market up at these upper end of the areas where the market has failed and starting to roll over. But we'll see. Well, let's take it one step at a time. Remember, be selective in your trading. Take the best stocks that you can find. And if you can't find them, so be it. Take a step back and start looking for setups for the next day. Have a great day. We'll speak to you tomorrow. Take care.